On today's hot sheet, I'm discussing Redfin's home price index, housing starts, and how the housing market slowdown is affecting the economy. Today is Wednesday, December 20th, 2023. I am Byron Lazine, and the hot sheet starts now. Welcome into today's hot sheet. Love to know in the live chat which market you are tuning in from. Hit the subscribe as well as the bell so you get notifications every time we go live. And we'll be live in BAMX today, or at least I will be with our senior editor at BAM. That's going to be at 3 p.m. Eastern, 12 o'clock Pacific time. So BAMX members are going to get a full hour with me going over the show notes from this show. If you're a BAMX member, you know exactly what I'm talking about. Last week, we started to release the show notes every single show for the hot sheet. Show notes look like this. Here's today's show notes. We have 3 topics and 3 segments. Our BAMX members gets access to those show notes each and every day, as well as the daily downloads from the hot sheet. Today's live stream in the community, I'm going to go over how to best use the hot sheets in your marketing, as well as with your database, how to access them and how to utilize them. So that will be today. If you're not a BAMX member, use code FROSTY to get 25% off of BAMX. It's our biggest sale ever. Code FROSTY right now to get 25% off of the BAMX annual membership and to be a part of today's live stream at 3 o'clock. All right, let's take a look at some news from Redfin. They just released November's HPI, the Redfin Home Price Index. They're seeing home price growth slowing for the 3rd straight month, but supply is increasing. Okay, the supply crunch has eased across the country, according to Redfin. U.S. home prices rose 0.6% from a month earlier, so still month over month in November, an increase on home prices. It's the smallest increase, though, since June. Here you see the Redfin Home Price Index from January of 2012 until today. And you can see, obviously, the index for home prices is just up and to the right with an acceleration here these last few years. So when you buy real estate on a 10-year cycle, it typically looks like this. The chart you could pick almost any 10 years and you can run the chart and it will look like this for folks who are concerned about buying at a peak price, because when people thought we'd be down on prices, November was actually up 6.4% from a year earlier. So month over month, smallest increase since June, 0.6%. But year over year, from November of last year to November of this year, home prices are up 6.4% from a year earlier. So that acceleration, as has happened for decades on home prices here in America, continues on home value. Those buyers who were educated to wait for a 20% drop might have been right in a couple of markets across the country, but overall, that was really bad advice for the average home buyer coming into 2023. Here you see the month over month numbers, and you see a deceleration, obviously, and we're going to start to even see in the next couple of months, as Redfin comes out with December and January, what I believe might even be some negative months over month on the home price index as we're getting into that seasonal time, right? This drop right here that we're seeing from last month is not actually a drop. It's a drop off of what we experienced the month prior, but still 0.6% up for the month. This line could break down, obviously, below below 0%. And like it did in August of last year, that was a rate correction, but we typically will see a drop for seasonal prices as well. Okay, there's your Redfin update. A little bit more data here on Redfin. New listings, they say, increased 1.3% month over month in November. We saw that with the Altos research. We finally broke, year over year net positive on inventory. So that matches with that. Reached the highest level in over a year on a seasonally adjusted basis for new listings was November. Pending sales also rose by 2% month over month to the highest level in a year. see pending sales reach that level in November, that's a sign that there is some pent-up demand and could be a really good sign for what is going to come in January and February with home buyer demand, albeit mortgage applications did go down this week. That data just released this morning, but you're talking about the week before probably the most major holiday in America, so it does make sense. It's seasonally. You don't expect it to go up. We can get to that a little bit later. Homeowners possibly tired of waiting contributed to the increase in new listings, providing relief to the historically low inventory. And that is a projection from Zillow that is something to continue in 2024. Homeowners tired of waiting for the house that suits their needs, for their lifestyle, for what they want to do in the future. And they decide, okay, I'm now comfortable with selling and tapping into this equity and going out and getting the rate at where it is. 14 out of the 50 most populous U.S. metropolitan areas did experience month-over-month declines in November. That also means 36 out of 50 experienced that increase, making that total of 0.6 overall for the year. Let's take a look at some of those local locations as tracked by the Redfin HPI in November of this past year. Anaheim had a month-over-month change at 1%. We can even let's go and categorize. Let's go with the biggest losers, I guess, first. Here we go. San Antonio, 1.9% month-over-month change. That's good for a 0.5% increase, though, year over year. That was San Antonio. Austin, 1.3% month-over-month. Austin, one of the biggest, declines for year over year, is only down 6.2%. Okay. On their home prices. Minneapolis down 1.3% month over month. Warren, Michigan down 1%. Sacramento down 0.7%. Virginia Beach down 0.6%. You get to Dallas at 0.5% negative. And all the other out of the 14 of the 50 most populated metropolitans tracked by Redfin, everybody else that was on that losing side is below 0.5%. You've got Detroit, San Diego, Nashville, Oakland, Baltimore, Phoenix, and Denver. Houston coming in flat. Here are some of the biggest winners as tracked by Redfin. Chicago up 2.4% month over month, and year over year, Chicago up 14.2%, just absolutely ripping. Newark, New Jersey up 2.1% month over month and 14.1% year over year. Those seem like unsustainable numbers to me in those two cities moving forward, but that's where we're at right now. New York, 1.9% month over month, 8.4% year over year. You can always see that in the Big Apple. Newark, of course, a neighboring city, and maybe you're seeing prices push up there because New York has gotten, is starting at a higher level. Pittsburgh, 1.5% year over year, up 10.6%. Cincinnati up 1.3% year over year, almost up 11%. Las Vegas now starting to rebound from where they were last year in a significant way, 1.3% month over month change year over year. That puts Vegas at 2.2% increase. Nassau County in New York is 1.2% month over month, 8.8 on the year. San Jose, 1.2% month over month. Cleveland, 1.1%, up 11.6 for the year. New Brunswick, New Jersey, they're up 11% on the year, 1.1 on the month over. Providence, 1.1 on the month over, 13.2 on the year. Anaheim up 1% on the year, 9% on the year. Miami up almost 11% still, and that is a heated market. Maybe going to get into unsustainable territory there at some point. Tampa Bay, 1% on the month, 6% on the year. So you just got some huge numbers. Look at Boston, 0.9% on the month over and 11.4 on the year. Columbus, Ohio. We know Ohio is starved for inventory, 0.7% on the month, 11.8 on the year. So nationally, again, 0.6% month over month and 6.4% on the year over year on the Redfin Home Price Index. One of the things that can help home prices cool a bit, or at least relieve some of the tension on home prices, would obviously be more inventory. Biggest impact we can have on inventory has been this past year from the builder community. They have new data out this just yesterday, actually. New residential construction data for November of 2023. The U.S. Census Bureau and the U.S. Department of Housing and Urban Development jointly announced the following new residential construction stats for 2023. Here they are. Building permits. These are seasonally adjusted annual rates. Okay, so this is not the month of November. This is in a seasonal adjusted rate. Building permits coming at 1.46 million. Housing starts coming at 1.56 million. Housing completions coming at just under 1.45 million. And we'll get another release in January. Here's the chart on the seasonal adjusted permit starts and completions for new residential construction. Will be available, of course, in BAM-X. The seasonally adjusted rate of 1.46 million is 2.5% below the revised October rate of 1.498. So dipping down a little bit, but it's 4.1% above the November 2022 rate of 1.402 million. Single family authorizations. So that's total, right? Single family authorizations in November were at an annual rate of 976,000. It's a 0.7% above the revised figure of 969,000 that we had in October. Authorizations of units in buildings with 5 or more were at a rate of 435,000 in November. Here's an interesting chart on this stuff. New housing units started in the United States going back to 2003. You can see the level for total starts in 2003, really through 2006. We were up over 2 million throughout those years on total starts. On single family starts alone, we were up over 1.5 million before the great financial crisis. And we dipped down as low as 500,000 in our bottom of 2009. It really stuck there all the way through 2012, 500,000 on or less on single family starts. And then it was a very slow crawl from 2012 until 2020, which is when we hit a million again. It was a very slow crawl up from 500,000 year over year, just incrementally getting a little bit better, but nowhere near what we know we need to make up for the shortage of where we were building. They, in order for us to have the inventory to meet the demand today, they say we're anywhere from 2.5 million to 7 million homes short. We would have needed to build from 2012 on single families to 2020 up near that 1 million or above mark. We didn't hit 1 million until 2020. Now, you did see with the rates at the end of last year dropped us under 1 million. Now on single family starts, we're back up over 1 million right now. How long will builders sustain this? If rates come down, probably for the foreseeable future, that would be they're at a much healthier rate too. Keep that in mind. Look at they're not getting ahead of themselves like they did in 2003 and 5. You see much less speculative building. Certain parts of the country, certainly, I get that. But broadly speaking, you see less of that. You do see builders really being cognizant of location. We've talked about in the past, not getting ahead of themselves and owning too much land. And so, sitting above 1 million on single family and 1.5 million on total starts, that's what it's going to take here for an extended period of time to get inventory at a much healthier spot in this country and in this economy. And speaking of the economy, there's a piece in the Wall Street Journal that says the housing market slowdown is rippling through the economy, and they have 5 charts to show that. Okay, so obviously following the Fed rate increases and job growth that is tied to housing sectors, spending and job growth rather tied to housing sectors are struggling. Okay, so here's 5 charts that show the impact. Now, I'll make the case as we go through this that, to me, it highlights why inflation is even lower than where we say it is today. When you look at how much, 35% of inflation is made up on shelter, but you look at across the economy, how much the slowdown, the housing recession that we know it of the past year and a half has brought inflation down across the board. Okay. You've got number one, less spending on furnishings. Okay. When people buy and sell homes, they often spend on remodeling, then on furniture once they move in. With sales of existing homes in a slump, spending on furniture at home improvement stores has fallen this year compared with 22. This is according to the Commerce Department. So just take a look at this chart here. In 2022, to start the year, building materials, garden equipment, and supply dealers. Remember, in the beginning of 2002, interest rates were still very low. You had them at this number here, percent change from the year earlier, of as high as 15% up. Okay, even as late as third quarter of 2022, you had up over 10% from the change from a year earlier on building materials, garden equipment, and supply dealers. Today, that number is negative 2.5%. Okay, furniture and home furnishing stores, you had as high in quarter one of 22 at 6%. Really, the beginning of this year, you had it up over 6%. Now today, we're down negative 7.5% on furniture and home furnishing stores. So two numbers showing the decline there across the furnishing and supplies for homes store. How about employment in select industries change from a year earlier? Okay, so furnishing and home furnishing realtors, it would retailers. It would make sense that furniture and home furnishings, if the sales are down, that the employment would also be down, and it is. It was up beginning of 2022, over 4% from the year earlier. Now negative 4%. Okay, building material, garden equipment, and supply dealers, basically flat to start 2022 from the year earlier. In quarter one of 22, they got up to plus 1%. Today they're down to negative 4%, just like furniture and home furnishings. Electronics and appliance retailers. So employment there in quarter one of 22 was up over 4% from the year prior. The year prior today, negative 6%. So needing less staff, obviously, with the decrease in demand in those sectors. Employment in select industries, this would be service to buildings and dwellings. Okay, so services to these buildings, probably thinking more, commercial, buildings, buildings and dwellings would be people's homes, maybe more on the apartment side, but these services in the beginning of 21 were up 11% year over year. Now we're seeing them only up 2% today, year over year. Just in the real estate category, you had up over 5 to 6% in 21, now down to about up 1% year over year today. U.S. private residential construction spending. This is probably doing the best, and that, correlates with what we just went over on these starts. The starts are pretty healthy. They're pretty strong. They're not spending what they were in the beginning of 22, which exceeded $950 million, but they're still spending way above 2021 levels, where 2021, you started the year at $750 million and you ended the year around $850 million. Today, we're spending more than $850 million on private residential construction spending, up near $900 million. And really all year, that number's been moving up and to the right. It's been increasing, not decreasing. So to me, yeah, it's come off the top of, early 2022 when interest rates were near fake rates before they started jacking them up. But we're going back up in the right direction. So that tells me a story that, and it, with yesterday's builder sentiment going up, it tells me that builders are going to continue to supply inventory. The really smart builders, again, are doing it in the great locations and trying to hit price points that can move. Housing starts and permits change from a year earlier. Obviously, we just went through the starts and the permits, and they are trending up all year, down certainly from the peak in 2021. Okay, there's a Wall Street Journal 5 charts. 5 charts will be available. You want to use those with your database or any of your marketing. They'll be available for BAMX members inside of BAMX, just like today's Hot Sheet show note live stream, where we go through these show notes with our BAMX members. They get access to them every single day, how to use them, where to find them, best practices on Hot Sheet show notes. That live streams today at 3 o'clock. If you're not a BAMX member yet, use code Frosty, get 25% off. It's the biggest discount we've ever done. You get 25% off. You do it on the annual rate. When you lock in at today's annual rate, if that rate ever increases in the future, you get grandfathered in at your current rate. Use code Frosty to get 25% there. I mentioned that mortgage applications data came out this morning, and it was down. First week we've seen mortgage applications decrease in I think 5 weeks. Okay. So mortgage application decreased 1.5% from 1 week earlier, according to Mortgage Banker Association, despite the big drop in rates. With the positive news about the drop on inflation, the FOMC projections proclaim and pivot towards rate cuts. The 30-year fixed mortgage rate reached its lowest level since June 2023, declined to 6.83. This is Mike Fratantoni, MBA's SFB and chief economist. At least as of last week, borrowers' response to this rate move was rather tepid. So VA refinance applications did jump 18% for the week, but otherwise both refinance and purchase applications showed small decreases overall. I think that we saw 5 straight weeks of mortgage application increases. So seeing this so close to the holiday, to me, it tells me it's more seasonal than anything. We won't know until we get on the other side of this holiday and we see how the first week in January, the second week in January react, and how they react not only week over week, because obviously they'll be up from the week prior, but how do they correlate to January of last year? We'll be looking at that very closely on mortgage applications as we launch into January here on the Hot Sheet. Let's launch into where the 10-year is. And it brings a smile to my face every time I see this little ticker on Wall Street Journal being in the downward direction. We're now under 3.9 on the 10-year, coming in today to start the day at 3.895. Yesterday's 30-year fix held strong here, where we've really been accustomed in the last few days, last 4 readings really, coming in at 6.64. And that's where we're at today to start the day on the 10-year and the 30-year. Take a quick look at the markets. Dow seems to be down a little bit, as is the S&P. NASDAQ up just a tick here to start this Wednesday. Hope everybody has a great day. Hope to see you at 3 o'clock inside of BAMX for the the Hot Sheet show notes full breakdown with our senior editor, Vanessa, who helps put those together in their entirety. They're always available for BAMX members. This live stream will be available for replay. If you're not a BAMX member, of course, use code Frosty, get 25% off, and I'll see you today at 3. Until then, toodaloo.